Hey all, welcome to Make Money Count. Today we're going to be talking about 2 strategies that you can employ to make money in this market. Best investments for you in real estate.
Yeah, so I think that this is a conversation that needs to be had, especially when we're in the middle of a market where we've been so concentrated on bond yields and what the Bank of Canada is going to do. At a certain point in time, that stinking thinking that we've been talking about ends up breeding real malaise, and nobody wants to do anything. And it's only until we are out of a bad situation that everyone looks back and says, oh man, I should have done that then.
Yeah, that was the buy.
There's a really good adage, really good kind of old saying, which is you never make money when you sell something. You only make money when you buy something. So today I want to talk about 2 strategies that I think can help you make money now when you buy something. One strategy that we've seen being employed with great success so far is a bit of a play on CMHC's increase to the $1.5 million maximum on CMHC insured purchases. And we've got some investor clients that have gone out and acquired single family residential, so detached, semi-detached row towns in good areas in the downtown Toronto core. I've started to see people doing this now in other cities, and they're fixing them up. So they're buying them for somewhere between $600, depending on where they are. You can still find, a 20 by 100 foot lot in relatively close to the downtown core for $600,000, probably in the East End. But for $600,000 to $1 million, they're buying them. And then they're putting in $100,000, $200,000, $300,000 to fix them up, to make them like a condo on the inside, right? So think like finishes that are really nice. They don't have to blow the budget, but everything's done in that house, right? Like there's almost like a certainty that the house isn't going to require repair at some point in the future. Sometimes if the house is kind of getting abutting that $1.5 million mark, you might even see these people put in a basement unit to get some rental income. And then they're listing them. And they're listing them for pretty darn close to $1.5 million. So as long as you can think about it, right? Like you work out your numbers. I'm going to buy it for $650,000 or $700,000. I'm going to put in $300,000. I'm going to be holding that money for 6 to 12 months in this project while everything gets completed. And then I'm going to sell it. And I'm going to sell it for as close to $1.5 million as I can get. People are seeing great success with this right now. And maybe in the future, we'll show you a couple of examples. Maybe if you reach out to us, we can share with you some of the strategy about how people are doing it. Again, we're mortgage agents, we're mortgage brokers, we're consultants. We want to help you with your mortgage. I'm just telling you that in this market right now, we're seeing great success with people employing this strategy. The benefit is in the end, you end up with this product that you're selling into the market at $1.5 million. The borrower in that case is able to purchase that property with relatively little down payment, right? CMHC is allowing you to put, it's not 5% down because of the scaled requirement for purchase because it's over that threshold. So it's still, I think about 8% is the amount of down payment. So think about it. If you're buying a $1.5 million house, you can now buy that for $120,000 down payment. And get CMHC insurance on it. You might even have some help with a basement unit for rental income coming in. Really, really cost-effective alternative to a condo, which is what we're going to talk about as option number 2. But it's a cost-effective alternative. You can generate some rental income. And I mean, this has been said so many times, but they aren't making any more land in the city. So it's very likely that the capital appreciation you're going to see on a single family residential with some dirt underneath it will be more pronounced than on a, condo, especially in this market right now where even saying the word condo, I think costs you $5.
You're in the hole already.
Yeah. Like, there's like a stigma associated with it almost.
Yeah.
So, okay, that's one really great idea. I think that it will serve you very well. I think that, and I think it'll serve you very well on either side of that transaction. Like, I think it's going to serve you well if you are the guy or the gal who is buying the house that needs help, fixing that house, and then pushing it out into the marketplace. I think it's also going to serve you well if you buy it. Mm-hmm. If you're the buyer at $1.5 million. Okay, option number 2. So, there was an article in the Globe and Mail about this, and maybe we can put it up there for you. But we are seeing now more and more bulk transactions of condos. So a builder has gone to market, and we're going to see more of this going forward. A builder has gone to market with a condo development. Mm-hmm. There are no sales right now of condos.
None, yeah.
So they are left. So typically, and I've got some really good buddies of mine that are developers, right? And typically, successful developers will hold back a part of their inventory. It's just programmed in them, right? They build condos. They like the product they're building. They stand behind the product they're building. They're building a 100-unit condo, and they're going to hold back 10% of those units, maybe 5%, probably 10%, depending on the market. Because once the condo is completed, those units will typically sell for more. Mm-hmm. It's programmed that way, right? There's an equation to building a condo. There was an equation to building a condo. And let's just use easy numbers. If you are building a 100-unit condo, you need to sell between 65 and 75 of those units in order to secure your financing. The remaining units, you can hold all of them. And in the past, you would have been rewarded handsomely for having held back those remaining units, because by the time the condo is complete, you can push those out into the market and you can sell them for the price of the market for those new units. And if you think about the reason, one of the reasons why we got into this problem is because purchasers who were buying the pre-construction units were constantly proven correct in that there was a lift on those units. They were buying them for $1,200, and when the condo was registered, they were selling them for $1,600, $1,700. Most of the time, they were doing it well before the condo was registered even. Mm-hmm. So the builders got used to this appreciation, and part of the profit on their deals was holding back units and then selling them. That doesn't exist anymore. Builders have kind of carved back the number of units that they hold, but some of them can't carve back the number of units they hold, right? So they got to the threshold of the 75% of the units. They couldn't really sell anymore in the market because the market's horrible. They got their financing. Now, out of those 75% of units that they've sold, a lot of them are coming back to them. People are walking away from their deposits, and the builder is left with a huge number of units in these projects, and the towers are up. So what does the builder do? It's not just their profit that's in that. Like, you get the big bad developer story is over now. I don't know if you remember this, right? Like, it was like the problem with real estate in the city of Toronto are these greedy developers. Mm-hmm. That notion has been completely dispelled now, right? Like now we are keenly aware that the developers are getting murdered. And that's why we're not seeing any supply come online. So these developers that have all of these units to sell in these buildings that are built, and in those units, baked into those units, are their profit. It's also their equity and then some. Meaning the developer wrote a check initially for the land. The developer wrote a check to start the construction. The financing only came in for 75, 80% of the construction costs. The developer was writing checks. Mm-hmm. Now it's time for the developer to get that money back. Where's that money? It's trapped in those remaining units that have not been sold. And those units are selling. They're seeing bulk orders for those units from private equity funds out of the States, man, family offices. And they're going in and they're buying 20, 30, 40, 50 units in condo buildings, and they're turning them into rentals. And there's an advantage to that for these entities, because if they need liquidity, so let's say you put together a fund that wanted to go out and buy these units. Number one, you're buying them for less than what it costs to construct them.
Right.
Like you're buying them a totally fire sale, and you're buying them from a developer that just wants out or needs to be out. Mm-hmm. The alternative for the developer is an inventory loan, where they say, you know what, I'm going to borrow the money to hold these units myself, acting essentially as the family office or the private equity fund that's going to come in and buy those units. I'm going to hold these units by myself, and I'm going to take an inventory loan to hold them. And those inventory loans are typically between 6 and 10%. So you as the developer have to be confident that you're going to be able to sell those units for 6 to 10% more in 1 year, or else you're not going to take that inventory loan.
Right.
So maybe they're planning on a longer term strategy where they're going to hold it for 1, 2, 3 years, but obviously understanding that they're going to incur interest costs associated with carrying it for that length of time. And if they sell it, the entities that buy them have this really great investment asset. Again, like, you got to be careful because like your cost of capital has to be pretty cheap in order to debt service those with the interest or with the income you're making off of the lease.
Right.
But we are now seeing a market where that works. I think that both of those strategies, when we look back on this time that we're going through right now, a few years down the road, we're going to say, man, those were winners. So arm yourself with this information, arm yourself with the knowledge that it can happen. If you want more details, reach out to us.
Yeah, give us a shout.
But yeah, like there you go. Like today is a bit of a positive spin. Like, sure, the market sucks, but remember, you only make money when you buy. You never make money when you sell.
Yeah. Thanks for tuning in. Hit the like button, hit the subscribe button, and we will see you next week.